Now, Loizou from the Hellenic Bankers Association.
So, Chairman, if I give some brief points and comments on all three themes of this panel, banking sector, financing tools, and also capital markets. Banking sector, is the worst behind us? Yes, I think so. It is behind us due to strong capitalization of the banking sector, both in Greece and Cyprus, strong regulation. And I personally do not believe that the banking sector is a threat for any financial crisis similarly to what we have seen in the past, but we should place our attention and our focus in regulating other sectors, specifically the tech sector. That's where I see problems down the line. Now, on the NPLs front, we have definitely seen a reduction of NPLs from the banking system. However, the mechanism of reduction of these NPLs is through selling to asset management firms. That doesn't really solve the problem because you still have the NPLs within the system. Now, definitely we should find a more effective ways of dealing with this matter. The third point I would like to make on the banking sector is about recapitalization and the difficulties that we still observe for banks, either in Cyprus and Greece, raising capital, either through equity or debt markets. If it is debt, it can be a very high coupon. If it is equity, it may not be the case. Now, on the financing tools, and based on EBRD data, we know as a fact that most of the financing in the EU, and 60% of it, is done through internal funding. So if you have a corporate that would like to invest in an opportunity, they use their own funding. The number for Cyprus is 80%. So 80% of the companies use their own internal funds. The Greek number is closer to the Cypriot number than the EU average. The problem with that is the following. External funding is very low. 40% for EU, 20% for Cyprus. And what is the external funding in that case? The external funding is mainly bank lending. We don't see much factoring. We don't see much leasing. Not to mention the fact that the issuing of corporate bonds or the issuing of equity instruments are almost inexistent. So we definitely look for modernization of capital markets in the Eastern Mediterranean. Capital markets, how are they performing? My suggestion is not necessarily looking whether investors make profits or not, which of course is an important matter. The main issue is liquidity and whether these profits are sustainable. We have seen in many cases capital markets creating profits, but not enough liquidity to capitalize on those profits. Now, participation in capital markets is very low. Market structures are inefficient. And I compare now to the London Stock Exchange way that today is hosting this event. London Stock Exchange offers the elite platform, which is financing at the startup or early stage levels. Then they have the AIM, the alternative investment market for growth companies. And after that, they have the main markets that it can use by firms to either diversify their investor base or consolidate the sector or do an M&A. We don't see such a thing either in Greece, Cyprus, or even Israel. Now, when it comes to the extraversion of the region, between the three countries, Cyprus, Greece, and Israel, Greece has taken the lead, especially the Athens Stock Exchange, in leading a more regional footprint than Greek-only footprint, or an Israeli-only footprint, or a Cypriot-only footprint that we see now in these other two countries. It's my belief that this may continue. We have seen them recently acquiring a minority stake in Bursa Kuwait. And hopefully, we will see more cooperation in capital markets between the three countries. Currently, our company is one of the advisors to the Ministry of Finance of the Republic of Cyprus in exploring all feasible ways for strategizing for the Cyprus Stock Exchange. And just to mention that the Cyprus Stock Exchange is one of the few remaining state-owned stock exchanges globally. And hopefully we will see a modernization and a redefinition of capital markets, not only in Cyprus, but also in Greece and Israel.
Thank you.